Hi, this is DJ Nick for today's share market video. So, what we're going to be discussing today regarding the intraday analysis is the best ways to get an entry into the trade. So, if you're trading options, futures, or stocks, the most important part of the stock important part of the stock trade is the entry. So what we are going to be looking into right now today is how do we get the best entries and trades. So there are basic for beginning traders that are just starting out, there are eight basic ways, eight things that you must follow. So let's take a deep dive into what these really mean and how do we apply them. So, rule number one here, what we can, which is like the golden rule, is to always trade, wait and trade at the key support and resistances. So you can identify the key support and resistances with the open interest data. You can identify them based on historical movement that has taken place at that support and resistance. So trade at these levels so that you would be able to correctly judge where the market is going, because it's at these levels that you get reversals. And always remember, the support and resistances are interchangeable. So a support can become a resistance, and you should be aware when it is becoming a resistance, and this can be understood by your candlestick chart patterns and indicators. So always get confirmation at key support and resistances and make sure your entry is at or close to these key support and resistances. So your decision to entry should begin from the key support and resistance areas. And also, what you can look forward to get good entries is the RSI crossover and the Fibonacci pivots. So the RSI crossovers, that is whenever the RSI is crossing over the 50, and uh, the stock is moving from the pivot Fibonacci pivot region, you can go into a buy if it's above 50, and if it's below 50, you can go into a sell. So keeping in mind the pivot and the RSI is a very important method of entry as well. So the RSI Fibonacci pivot entry is also very reliable entry. So what we can do, I'll make a video on how it is to be done at a later point, but now remember that you can use these indicators as a good entry method. VWAP has always been a great entry region. So any candle that closes above the VWAP region, you can ensure, you can be sure that it is following a pattern. So VWAP crossovers are also a good entry for intraday trading. Then what you must do is you should combine all the chart patterns and candlestick together. So whenever you have a VWAP signal, because these eight rules are not to be taken just by themselves, they are a combination, and you're supposed to take them as a combination of all of them together. So at the key support and resistance, wait for the crossover and the Fibonacci confirmation with VWAP confirmation, and how the chart patterns have been forming. So this can be on the either the 15-minute or the 3-minute charts or 1-hour chart, and you can take into consideration those patterns and candlesticks. And also you can use the elephant's tails and the color change strategy, which is actually mentioned um, 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 uh, quite repeatedly by Victor Valdez in his videos and in his books. So what you can do is you can take into consideration how this ETC strategy, which works based on the 20 and 200 EMA, you can also follow that apart from the rest of it. You can also follow this together, because whenever there's a chart pattern or candlestick and the VWAP crosses over, you will definitely have an ETC that satisfies the same strategy. So it all works together. So just look for these cues as well, so that you get a complete uh, wholesome entry without any type of chances of leaks in the entry. So, and also make sure that you do a multi-time frame analysis. I personally prefer to do the 15 and 3-minute time frame analysis. So make sure you do a multi-time frame analysis before an entry, just to get a confirmation, because you might not get all these signs in let's say your time frame, but if you have, like, let us say 3 or 4 of these signs, and the rest of the signs that are missing out on the time frame that you're using, if you see it in the other time frame, then you can rest assured that it is a you're making the right decision. And one more thing I would say is that do not trade as soon as you have a signal, especially at the key support and resistance. Always wait for retracements. Okay, so retracements and pullbacks are a commonplace in the stock market. So wait for these retracements, and then ensure that you take the trade. So do not just take it based on a candlestick pattern. Wait for retracements. Wait for the candlestick pattern to form after the retracement, so that you may take it, so that you will be sure if it is a range bound trade, then you will not or a certain trending trade. So if you want to get the trending trade, you will have to wait for retracement. And if you just want to trade on a range bound, then you can go ahead without checking for the retracements. But a confirmation, of course, is very important. And sometimes at the key support and resistance areas, you might not get a retracement. For example, today in the Nifty, Nifty, we saw like this region over here. Okay, let me just move this view. So we can see that this was 14,700 was a key support, but you can see that after the gap down opening, it touched the region, and it started to break the region. So there was no retracement. In this type of scenarios, what you must do is that you should not just go by this break. You should wait for the next candle confirmation, and after this confirmation, you can enter into a short trade. So you can enter into a short trade after the second candle confirmation. Ideally, it is also better to have a third candle confirmation and then enter into a short trade, because you might have reversals, and because there is no retracement, it's better to have 2 candle confirmations before you enter into the trade. And also you can see the ETC rule was satisfied over here, so that is another confirmation that this is a solid entry. And if we are combining all of that together, we don't have a VWAP on the Nifty, so you can check for the VWAP on the options. And also what you can look forward to is the Fibonacci and RSI crossover. So we can add the Fibonacci and RSI just to show you how this is done. So we have RSI here. So we'll draw line at the 50. And what we can see here is that, so this entry point where we got this confirmation, you can also see that the RSI is below 50. So whenever the RSI is below 50, it is usually a downward trend. So you can it usually symbolizes a downward trend, and you can take the downward trend on the RSI. And also, another way of looking at the RSI is to change the settings of the RSI to 3, and when you do this, what you are able to observe is that you get a more clearer picture of the overbought zone. So you can see that how this region was overbought, and then where this region started to range, we can see that there was the buyers were it was being oversold, and so there was more buyers, there was more there were more positive traction over there, so it was more buyers that were coming in and filling the gap. So we can use that to so we can use the 14 to understand how the market is trending, and we can use the 3 RSI to gauge when the reversal. So for example, like over here, when the market is starting to become range bound, you can see that there is a sharp movement, sharp spike back of the RSI. So, and this is in correlation again with the with this pivot region. So you can use RSI based on that. So at the pivot region, have a look at the RSI, see where it is. If it is like if it is just started to go below this either 30 in the 3 or 50 in the 14, then you can go in for a sell signal. But if it is persisting, or if you can see the RSI being down at that region for a quite a long time, then it usually means that there will be reversals, and it's not the ideal time to take the sell trade in this situation. So what you must do is have a look at how the RSI responds and correlates with the market as well at the key support and resistances, so that you would be able to get into better trades. And an example of retracement we can see over here. See again this range, it was it now serves as uh, a resistance after it was broken. And see the retracement over here, it's we can see that it has been broken, and now there is another range over here. So this blue line is another pivot. Okay, so over here what happens is that this region has not been broken, and it has again started an upward journey, but then at this resistance it has taken again it has taken resistance, it's coming down. But over here we can only see a false breakout, and again it has retested it, come back down. So this the retest is actually going on right now. So if this break happens, which is now happening, so we can see that the RSI is positive. So this is actually a sign of positive. This is actually a buy signal. So what I would suggest is that you could enter a trade around the 14,660 and take it up to this region. So you should be able to get up to 14,690 from here. So that is because based on the RSI and the price action. So that's what we can say over here. So similar to this, you should be able to take your entries, and remember that retracements are also important, and retracements are important at the key support and resistance areas. So always look for retracement. I'll make a separate video on how you can identify retracements. I'll make that video next, so that you have a clearer picture. And also remember that the intraday rally usually begins not at the start. So at the beginning of the day, you will have you will not be able to get a clearer picture of the market. The market breadth might follow previous day patterns, but it also will have fresh infusions from the foreign investors and direct investors. So you will not be able to have a clear idea of how the market is going to pan out. So there might be gap down opening, gap up opening, there might be a flattish opening. So all this would be classified into the initial balance of the market. So let the market breathe for some time, and I always suggest, this is a very important rule. Just because it's number 8 doesn't make it any less important than all the rest of the rules. All the rules are very important, but rule number 8 is also extremely important. Rule number 8, which says that intraday rally starts at 10, so that's when you want to get into the market, not before that, when you have all the market settling in. and you might not get the right, you might get an over bought sell signal, overbought buy or an oversold sell. So just wait till 10 a.m. and then enter, so that you have the best entry. So these are the basic 8 ways of getting the best entry. Key supports, resistances with retracement, RSI crossovers, pivots, VWAP crossovers, chart patterns, candlesticks, and the EMA ETC strategy with the multi-time frame confirmation. So pay attention to these, and you should be good to get good entries into the market. Thank you for listening, and do stay tuned, subscribed, and like the video, so that you'll be getting more of the same. And the next videos will be, of course, on the retracements and how you do the identification for RSI crossovers. So I'll make sure that you get those videos, and happy trading and trade safe.